Oil is a crucial pillar of the global economy, signaling either a decline or rise of this fading system. With oil sinking below $40 a barrel, oil workers losing their jobs, and now the stock market's feeling the deflation, it's time for the governments to step in and save the day. With economists predicting an increase in interest rates from the Fed, once again, the bankers have been pushed into a corner, hoping for a miracle. You came here for the truth, so let me unveil that for you. Today we'll get into the oil deflation and how that affects the markets. And we'll also discuss something even more important. So stay with me as we look at the CNBC article talking about oil. Free falling oil prices have created an environment of uncertainty across financial markets, but turbulence should not impede the Fed from hiking interest rates. That's right. No matter what happens, you have to increase interest rates. Okay, it's December, and they want interest rates to be increased now. The previous few times, the markets weren't so sure, but now all the economists are saying, no, December, you have to. We are expecting you to do so. The Fed is expected to lift its target Fed funds rate off of zero, ending a 7-year era of historic crisis-level rate policy. The central bank Wednesday will also provide economic and interest rate forecasts that could help shape the view of interest rates in 2016. I've discussed entire videos about this before, showing you how the so-called predictions, so-called forecasts are never the way that they claim it to be. Both the pending Fed action and the plunge in oil down 18% since December 4th have come together as markets are increasingly worried that widening spreads in the junk bond market could be a signaling weakening economy and a rougher time for stocks. Credit markets became even more nervous and so on and so forth. So here we have a problem with oil affecting the global markets, something that has happened continuously over the past few years, and in fact historically as far as you want to go back. But I'm really seeing discrepancies since the financial crisis, a lot of distortions here, and the fundamentals have become a little out of whack. That's what this article is about. There's no sugarcoating it. Friday was a nasty day. Jim Cramer once again considered the market to be pure crazy town, with lower oil prices bringing stocks down. That seemed completely counterintuitive, as cheap oil should be like a tax cut for investors. So why exactly is this the case? If cheap oil is available, like they said, it would be a boost to the economy. However, economy is doing worse now than ever before, and you have the individual who's bullish on everything here, Jim Cramer, saying that it's time to sell. Can you believe it? Those big institutions who sell stocks off the falling price of oil are thinking that the lower petroleum goes, the more likely it is we will have big defaults in the high yield bond market. These are things to pay attention to. I'd like to move on right here. As you look at the real estate market, I'm highlighting Canada and in particular Toronto, but this applies to many places around the world. New down payment rules unlikely to cool GTA market. That's the Greater Toronto Area. So what we have is obviously excessively high home prices here that have become literally unaffordable to the general public. This is obvious in both Toronto and both Vancouver. I'm sure in many of the cities that are potentially you are in or that you are close to have the same issue. Higher down payments on government-insured mortgages between $500,000 and $1 million may boost sales in the short run as buyers try to beat the February 15th deadline. So you're having this boom in the real estate prices. Why? Because they tried to make it as easy as possible for people to buy homes that they can't afford. So we have a problem ahead of us, and these small little manipulations that they do, tax loopholes or tax breaks, let's call them, are not going to do anything when you have interest rates at historic lows. So this is all connected here. Right here, as we look at the Canadian housing market, is expected to moderate. That means slow down, but I would like to even suggest a possible crash over the next 2 years. That's according to the Canada Mortgage and Housing Corporation. They said on Monday in its fourth quarter outlook. So obviously here, they're not the only one saying this. In fact, they said this highlighted portion at the bottom, the Canadian housing market has been a key concern for economists as household debt has risen to record levels in relation to income. I talked about it many times in these videos. I've highlighted it in my book as well. You can't have this happen and not have a crash. It's never been done before. So it would be historically nonsense to consider it to be possible. And they talk about, of course, low interest rates fueling this. Builders are always looking for bargains, so it caused quite a stir when a pleasant backsplit went on the market in this North York's Willowdale area, going for $1.1 million. All I'm trying to highlight here is that the average price for many houses in certain areas, not the average price overall, but in certain areas, half decent areas, $1 million is considered a standard price for a detached home. $1 million, and the annual income for people is nowhere close. There is a historic ratio that I've talked about here before, so I won't get into it, but essentially that is way out of whack, and Toronto is experiencing that right now. If you talk to real estate agents, if you talk to people who are either buying or selling or what have you, they would claim that that is not the case, but all these statistics continue to pile up. In my book, I talk about, I have an actual full chapter on real estate, and what I said that real estate is an excellent investment. A real estate property provides you with 4 different ways to make money, making real estate investing the most beneficial investment of all asset classes. Those 4 are appreciation, depreciation / taxes, amortization, and passive income. And I get into each of these sections and why they are important. But does that mean that you should buy real estate at any time in any area? And no, that is absolutely not the case. There's so much more detail. I do in the book get into a whole bunch of it, but all I wanted to say is this: you're looking for assets. Many people are asking me, what do I invest in? What do I invest in? Well, here I'm saying that real estate is my favorite overall. And people think, I can't afford real estate. I can't afford that. That's impossible. I'll just buy gold and silver. And I do promote buying gold and silver, absolutely. But what you have to understand is that there are different things that you can purchase within real estate. Here's a few hints here. What about a storage locker? Think about that in particular condominiums that are available, or even storage lockers that they sell outside and have it, like, let's say, independently. You could think about parking spaces. You could think about small pieces of land, just anywhere to have and hold your savings. Don't think about buying, a house which may be $1 million depending on where you live. Think smaller in those cases. If you want more information, you can always go to my eCourse, and I have a bunch of stuff in there. The eCourse is available at themoneygps.com/free eCourse. Moving on here, as we look at this USA Today article, this is what's more important than oil. Oil, obviously, being what many talk about as the most important commodity. And if you look at how it affects the markets, it's incredibly crucial. But what about this? Pumped beyond limits, many U.S. aquifers in decline. Nationwide analysis shows a depletion of groundwater widespread and worsening. We have an issue that is not being discussed. It's not in the forefront, and that is fresh water. Fresh water is the most important commodity. You think that it's, taken for granted. You open up your tap, there's water right there. But what happens when that supply is depleted? Well, we have a very serious issue, and I believe that we could have wars fought over the freshwater sources. And, in Canada, we happen to have more freshwater lakes than anywhere else in the world. In fact, more than all of the world combined together. This will be an important commodity, so think about that for investment purposes as well. Collecting water, very important. Terror plot uncovered overseas names Chicago as a potential target. And this CBS article is suggesting that Chicago may be an ISIS target, media reports out of Switzerland say. If I move on to a connected article out of the Toronto Star, the RCMP says media reports from Switzerland about possible ISIS-linked threats against Canadian cities, including Toronto, are being taken very seriously. Lower down, these reports indicated that Geneva, Toronto, and Chicago were being targeted for attacks. So what's going to happen here with all of this is that we are going to lose our freedoms. That's right. They're going to put more laws in place, which essentially allow them to dig deeper into our personal and private lives. We'll lose liberties. We'll lose freedoms. What else is new? It's hilarious. Okay, that's all for this video. Just wanted to mention those things for other individuals. Look into the different cities you live in and type in the city name, type in ISIS, type in Al-Qaeda, and just to see if there's any reports for your area. If you found it informative, please give me a thumbs up. Last but not least, you'll want to check out Amazon. That's where my book is at, and you can actually flip through the book. If you go over there, they have a look inside feature, which allows you to flip through the pages of the book to see if you like it. Take care.